Welcome to the stock analysis of Sharda Motor Industries Ltd. Today, we're diving deep into this leading player in the Indian auto ancillary industry. We'll cover their business segments, financials, management outlook, and key strengths and weaknesses. Ready to learn more? Let's get started. Before we begin, a quick introduction to PA Wealth. We're an investment services group offering stocks, PMS, mutual funds, alternative investment funds, insurance, and startup investments. We upload research videos on different companies, mutual funds, and financial topics every week. Subscribe to our channel and hit the bell icon to stay updated on the latest market trends and potential multi-bagger stocks. Now, let's start with an overview of Sharda Motor Industries. Sharda Motor, incorporated in 1986, is the manufacturer of exhaust system, catalytic converter, independent suspension, seat frames, seat covers for two-wheelers and four-wheelers, soft top canopies, and pressed part white goods products. The company serves as a Tier 1 foot vendor for some of the major automobiles and electronics original equipment manufacturers. It has got 10 manufacturing facilities, 3 sales offices, and 1 research and development center across various locations in 4 states of India. Let's break down their business segments. First, exhaust systems. This segment serves passenger vehicle, commercial vehicle, and off-road segment, and catering to most of the original equipment manufacturers in passenger vehicle segment. The company has an Indian market share of approximately 30% for passenger vehicle segment. With an annual production of around 1 million units, the company is catering to both domestic and international customers. Second, suspension systems. SMIL manufactures suspension systems for the passenger vehicles, commercial vehicles, and the off-road segments. The suspension segment has a market share of approximately 10% in control arms for passenger vehicle segment with 2 manufacturing units at Nashik and Pune. The company has an annual production of around 1.8 lakh units. Third, rooftops. This is a niche category and SMIL entered this market with a technical collaboration with B-Stop Incorporation. SMIL manufactures convertible canopy and soft top canopy in this segment. This segment is a minor contributor to SMIL's revenue. Let's now break down Sharda Motor Industries Limited's revenue based on the vehicle segment for financial year 2024. The passenger vehicle segment is the largest contributor, making up 53% of the total revenue. Commercial vehicle segment account for 42%. Lastly, other segment make up 5%. Now, let's look at the management of Sharda Motor Industries. Kishan Nagin Parekh is the independent chairman of the company. He is a commerce graduate and has over 33 plus years of experience in the field of business management. Sharda Railan is the non-executive director and co-chairperson of the company. She holds a bachelor's degree in commerce and has 38 plus years of experience in management in the automobile components sector and financial services. Ajay Railan is the managing director of the company. He completed his Bachelor's of Commerce and took 3 years training from Harvard Business School, USA under Owner, President Management Program. Ashim Railan is the Chief Executive Officer of the company. He is responsible for managing the supply chain, operations, strategy and innovations. He is graduated in Finance and Economics from Emory University, Atlanta and has various other business certifications. Let's now look at the shareholding pattern of Sharda Motor Industries Ltd as of June 2024. Promoters hold the majority share with 64.31%. Mutual funds hold 7.90%. Foreign institutional investors hold 2.43%. Other institutions collectively hold 1.41%. Public shareholders own 23.95% of the company. Now, let's delve into Sharda Motor Industries Limited's cost structure as a percentage of net sales for FY24. The raw materials expenses accounts for 77% of net sales. Employee cost make up 5% of net sales. At last, other expenses accounts for 6% of net sales. Let's now review Sharda Motor Industries Limited's financial performance over the years. Net sales have shown robust growth, increasing from 875 crore rupees in financial year 2015 to 2,809 crore rupees in financial year 2024, reflecting a CAGR of 12.37%. Profit after tax has also demonstrated significant growth, rising from 36 crore rupees in financial year 2015 to 295 crore rupees in financial year 2024, with a CAGR of 23.41%. Return on equity has increased from 17.60% in financial year 2015 to 28.80% in financial year 2024, highlighting the company's improved efficiency. Let's now turn to the management commentaries to get a better understanding of the company's performance. SMIL has bought back 1,027,777 equity shares at 1,800 rupees per share, totaling to 185 crore rupees. The management's first preference for cash reserves is mergers and acquisitions, focused on powertrain agnostic products. Consolidated revenues for Q1 of financial year 2025 grew by 5% compared to Q1 of financial year 2024 and amounted to 685 crore rupees. The EBITDA margin for the quarter also experienced an expansion from 10.4% in Q1 of financial year 2024 to 14% in Q1 of financial year 2025. The company's foray into electric vehicle space through a joint venture with Kinetic Green for developing battery packs with battery management systems has reached the testing phase, and the company expects to begin commercial production in the coming quarters. SMIL and POM has entered a joint venture to manufacture commercial vehicle exhaust systems in India. TREM 5 norms for construction equipment vehicles and all tractors are scheduled to be implemented from April 1, 2026. With the applicability of new emission norms, the off-highway addressable market for the company will become equivalent or larger than the current commercial vehicle market. In the passenger vehicle segment, BS6 RDA norms have been implemented from April 2023, requiring cars to achieve emission targets even in real-world conditions, as opposed to just a laboratory environment. The applicability of RDA norms would increase the content per vehicle by 10 to 15% for SMIL. Company is focused on the US and European markets for exports. Exports currently contribute less than 5% of sales, but management expects substantial growth in this area over the next 3 to 5 years. Now, let's talk about the company's capex. In lightweighting vertical, a new plant would be coming up by Q3 of financial year 2025, focusing on lightweighting and suspension systems. Approximately 50 crore rupees investment will be made on the plant. Now, let's discuss the strengths and weaknesses of the company. First, strengths. Established market position and strong customer base. Experience of around 3 decades in manufacturing exhaust systems has enabled the promoters to develop healthy relationships with OEMs such as Mahindra and Mahindra Ltd, for which SMIL is the preferred supplier of independent front suspension systems. Debt-free company with strong cash generation. SMIL is a debt-free company with low capital expenditure requirements. It can meet increasing customer demands with minimal incremental capex, which it plans to fund through its strong operating cash flow. Now, weaknesses. Customer concentration. The top 3 customers account for approximately 75 to 80% of revenue. Loss of any of these customers could have a substantial impact on the company's financials. Susceptibility to increase in raw material prices and pricing pressure from OEMs. The company has limited bargaining power with OEMs, which periodically revise prices based on their financial standing and willingness. As such, any benefit in operating margin comes with a lag. And that wraps up today's analysis. If you found this video insightful, give it a thumbs up and subscribe for more research-based financial content. Don't forget to click the bell icon for alerts on potential multi-bagger stocks. Got a topic you want us to cover? Drop it in the comments below. Thanks for watching, and we'll see you in the next video.